Good afternoon. Thanks for coming back up after lunch. Hopefully we can keep you guys out of the food coma. So as you mentioned, I'm Corey Davis. I run our fintech practice on the investment banking side, and I sit in San Francisco. And so to get us started, why don't I have the panelists introduce themselves? So with Melissa to my left, why don't you start?
Thank you. Good afternoon. Welcome. My name is Melissa Bernardino. I'm the head of compliance and risk at Finix Payments, based out of San Francisco, California. I have been in payments for 22 years and have done a lot of really neat things that were neat at the time. As the industry has grown, I've had a chance to move from product to technology to technical sales consulting, into AML and money transmission, MSB services, and now compliance and risk management. I've served as a merchant, a service provider, a payment facilitator, and now with Finix as a merchant acquiring processor. And the one constant through it all is as the payments landscape changes and evolves, so do the fraud schemes. Do we introduce our companies too?
Well, we can do that next,
Okay,
but you can do it.
No,
so
pass it on to Rachel.
Hi, everyone. My name is Rachel Jolicoeur. I'm the Cyber Market Intelligence and Financial Crimes Director at Interac Corp. My team leads the engagement with the financial institutions and partners and acquirers when it comes to anything related to fraud. So portfolios, anything on the engagement, mitigation, and strategic outcome.
Hi, everybody. My name is Manoj Verma. I'm one of the founders and Chief Revenue Officer of Tabapay. We're based in the US and here in Canada. We're a full-stack acquiring payment processor focused on serving predominantly financial technology companies with money movement. So the ability to move account to account, P2P, unloading. We're one of the leading partners for Visa Direct, MasterCard Send, as well as the top account funding processor in the US and in Canada. So companies like Wealthsimple leverage us to be able to move money in real time. So very familiar with some of the fraud solutions or fraud attempts and solutions that are being adopted in the US. So happy to share those with you guys.
Hi, everyone. My name is Mark Hines. I lead connectivity for Plaid in Canada. For those of you who don't know, Plaid is an open finance network headquartered in the US, but with a strong presence here in Canada. And with the advent of open banking and open finance, the use of data is fueling innovation in the payment space, but also in the use of data to fight fraud specifically.
And so that's a great place to start. So why don't we level set for the audience who you are protecting? Are you protecting the consumer? Are you protecting the enterprise? Or is it both? And then also, to the extent that you're in the US and Canada, maybe talk about how you go about preventing fraud in those two different markets.
So I can start. I don't mind. I can jump in. For those who are not familiar, Interac Corp. So if you're within Canada, we own and manage the network for debit, e-transfer, tokenized payments. So if you're paying with your smartphone or with your smartwatch, in addition to digital ID services. So who do we protect? It would be, I would say, a combination of we protect on behalf of our partners, so our issuers, our acquirers, and then also indirectly we play a role at also protecting our consumers, so those who are the end users of those services. In terms of digital ID, we're providing access to digital verification of identification on behalf of the financial institutions and also merchants that are consuming that data.
Melissa?
There you go. Finix is a payment facilitator and a merchant acquiring processor in the US with plans to expand internationally, starting with Canada. I would say that we protect first and foremost the merchants because that's the entry into the payments ecosystem, boarding those merchants for payment services through our sponsor banks. And then with that, to protect our merchants from account takeover, synthetic identity, fraud, trying to keep bad actors out to begin with, and then protect the good merchants once they're boarded. And secondarily, protecting the consumers and businesses who are making payments to those merchants, whether it be by card or by bank account, ACH in the States, EFT in Canada, working to make sure that's a legitimate transaction, and then protecting the money movement from initiation to settlement, and any parties along the way, to make sure that anyone involved in that is also acting in good faith and not with fraudulent intent.
Manoj?
We serve predominantly B2B2C, so for us, it's both protecting the merchants, and so in our vernacular, merchant, as we serve neobanks as an example, or Wealthsimple in our vernacular would be the merchant, and helping them support their customers. So obviously, the ultimate KYC is done by the merchant in this situation, but layering in various tools, and we'll certainly go through those later in this conversation about what some of those tools are that they can employ to be able to make sure that they can offer a consistent service to their customers. That protects them on the fraud side.
Yeah. Not dissimilar from the rest of the panel. We're a network. We build products for developers to build their own products on top of us, but ultimately designed to unlock consumer and small business use cases. And the only thing that I would add is similar to Interac, really, that network effect gives us a unique position in the ecosystem, specifically with how you can share insights and data to address fraud specifically.
Great, thanks. And I guess, we are in Montreal, so how many people in the audience are basically Canadian-centric or have a global perspective? I'd like to see a show of hands. Let's start with the Canadian only. US and Canada? Global? So it seems like we have a fairly Canadian-centric crowd, but maybe, Mark, following up with you, the structure of the banking industry in the US, much different than in Canada with 4,200 FDIC-insured banks versus kind of an oligopoly, if you will, in Canada. How do you all approach fraud prevention here versus elsewhere?
It's a good question. The answer really comes down to how you build a robust network. So, because a network ultimately facilitates payments both with reach of your network and with, when it comes to data sharing, speed of the data sharing, these things have to work well for there to be uptake, for there to be revenue and growth and all these things. Building those really has, at a very high level, two big parts. The first part is building to the major data providers from a Plaid perspective. That's not dissimilar necessarily between the US and Canada specifically. Similarly, in the EU, if we think we also operate in 17 countries there, but specifically in the UK, where there are 9 to 11 largest banks, similar approach. You have to build a lot of trust with them. You have to build strong, secure integrations with them. Where I would say certain markets differ, in particular the US and Canada, is how you manage the smaller and medium-sized data providers specifically, but any institution in your network. How we approach it specifically is you have to have excellent product market fit in our data connectivity products, and you have to look for enablers of scale, specifically working with platforms, and this is where partnerships becomes a key component in how you do business. I think it's fair to say in the US in particular, like what we call our long tail, which is basically how we cover the rest of the market, is one of our key competitive differentiators. And it's really because we've spent so much time thinking carefully about it, rather than looking at it as a secondary concern to our business.
And if anybody else wanted to jump in, I know there's differing levels of interaction between Canada and the US from the panel. But
I can comment on that if you want a little bit.
Sure.
So we're predominantly in the U.S. and certainly moving funds in real time. I mean, the saying is faster money movement, faster fraud, and we certainly see this in the environment today. From certainly leveraging Visa, Master, and others to move money in real time and account to account or P2P. There's major differences between the U.S. and Canada, and certainly comes down to mandates. So from a card not present environment, the Visa Master rules in Europe have mandated that both the issuers and the acquirers need to enable, as an example, 3D Secure or 3DS, putting a PIN in. And Canada's been far ahead of the US, I think, enabling PINs probably 15 years. There's a mandate in Canada where the issuers on the issuing side have to accept the 3DS transaction. They can decline it, but they certainly have to be ready for it. In the US, that mandate's not there. So 3DS is just really not that prevalent, and if you put it forward, you're not going to get the same type of experience that you would get in Canada. So for some of our partners here in Canada, if they start to layer on these network tools, whether it's AVS, whether it's Google Pay, Apple Pay, whether it's 3DS, it's important because the liability then shifts over to the issuer. If the issuer approves that transaction, the merchant, whoever the merchant is in this case, could be a neobank, could be a broker, someone that's pulling in those funds, is no longer liable should there be a chargeback on that transaction. Now, in the US, we see a lot of that where we can't use 3DS because the issuers will decline it or they just won't support it. There's no mandate for it. So there are other tools that people have to do beyond using network solutions in market today. There's third-party tools that you could certainly play in to certainly ensure that actor that you're pulling funds from, in fact, is a good transaction and it's an authorized transaction. So that's probably the major difference between US and Canada.
Great,
And
thanks.
if I can add to that, just reflecting on, going back a few years when we went to chip and pin in Canada, we have to all do it together. We knew that we couldn't have a maybe potential, some players are going to adopt it or not. So in Canada, we had to, across the board, agree and mandate that there would be a change, and that's where we saw the success. And I do a parallel with e-transfer. We all agree that we're sharing some data to a certain extent so that we see the entire ecosystem when funds are being sent, that from the sender and the recipient, we know ahead of time that that whole transaction ecosystem, we are able to follow it, and from beginning to end, we're able to analyze the risk on that transaction, which really help. I'm not saying that there's no fraud, but it does help identify fraud along the way from the beginning to the end of that transaction.
So at Interac, what are some of the key issues that you really focus on when it comes to fraud prevention?
Well, I think it goes back to having good data, being able to use that data to identify create a portfolio or really a profile of that individual. When it comes to, what are some of the threats out there, I think we know that we have some bad actors that are trying to join the service. We also know that regardless of how robust our fraud detection systems are, and the ones from the financial institutions, we are, and I say we as consumers, are the weakest link. So we have to ensure that there's constant awareness being done on the education side. So bringing up, being aware of what the latest fraud vectors are, what are the scams, but also give those tools to the consumer so that they can identify it. So I'll give an example. We're working on beneficiary verification so that when you're sending funds, if this person is identifying themselves as Tanya, and I'll pick up my colleague at the front there, is it really Tanya that I'm interacting with? It's okay if you have a previous relationship. However, if you're buying goods and services online, you're not always sure who you're sending your funds to. And then I'd also say just protect your credentials. We know, we've talked about it in the backstage there, MGM. Your credentials are probably stolen by now. So what other tools can we provide? How can we enable people to better verify that who they're interacting with, and also for players, merchants, know who that person is that is buying that product or sending funds.
Great, thanks. Now, Plaid is the great connector, right? We've talked a little bit about the network effect.
Yeah.
So, Mark, maybe talk to us a little bit about how you work with your competitors, as well as the network of customers that you have to prevent fraud.
Yeah, absolutely. So when it comes to Plaid, we break down how we think about this really into 4 buckets. So the first one is user verification. This is in particular a product that we have that does the normal KYC, AML stuff, But what we do in addition to that, that's really a single point-in-time piece of data that has, important regulatory requirements, meets all your legal obligations. We add into that sort of behavioral analytics, cell phone data, that kind of thing. So at the point of creating the account, which is often a key inflection point for fraud, that we're doing more than just the basics. We're giving our customers the tools to look at it at a more holistic basis. The second phase is account connection. So if you can connect your bank account, you can then use that information to validate the information you've just received from an alternate source, whether it's a credit bureau or a piece of government identification. The last piece, which is one of the really most interesting areas, is around transaction risk. So we have a product called Signal, which essentially will give you, for each transaction, risk scores that you can put into your own decision-making that leverage about 1,000 data points across our network, and which sounds very cool and ambiguous. So I'll give you two examples. What the hell does this mean in practice? So to give you an example, it will, once your bank account is connected, it will run a model of your transaction history, and if it sees things that are indicia of fraud, so like Mark has spent $10 1,000 times in the space of 24 hours, that's an obvious one of anti-money laundering. But more interesting ones too. So if the person who has used markhines@plaid.com to open accounts in various places, we will look at the name and the identifying information of all of those accounts, and sometimes there's differences in that information, or maybe there is a slight change in that information. This is something that plays into synthetic fraud specifically. And then the last bit, which is also pretty cool, is also leveraging our network, very specifically our fintech side of the network. There are a lot of very well-established, very useful consortia around fraud between financial institutions, much less so in the fintech world. And so several months ago, we launched, it's called Beacon. It's essentially a network where fintechs can share with us certain information where they have seen fraud. And when you, as our customer, are onboarding a new client, if we find that there is a connector between a previous fraud and that person, we will give you a score. We don't share the actual information back for a bunch of reasons. But this is the kind of thing that if you layer all this on top of each other, you reduce the incidence of fraud. I think you're never going to get rid of it differently. And there are many ways of coming at it, whether it's advanced processing or greater physical security or training your people properly. But one of the key ways, in particular, where we come at it is more data, generally speaking, lowers the incidence of fraud and the ramifications.
I see a lot of head nodding. Does anybody else want to jump in on the network effect?
Yeah.
I'll jump in. We're not dissimilar to what you've already heard. It starts with Finix as an acquiring processor with the merchants, as I said, the boarding of the merchants, analyzing. We do the full AML program, even though we're not required to register with FinCEN or Interac as an MSB. We have a bank-grade AML program that includes all the KYC, KYB, CDD, EDD, CIP, all of the checks to make sure that merchant, that business entity, and the beneficial owners, the control person coming in, are who they purport to be. They're running the business they're reporting to run. They're shipping the goods they're supposed to be shipping, and that everything appears to be above board. Once those merchants are boarded, we're working to do automated access review to make sure that the individuals coming into our platform, into our dashboard, into our systems are the ones who have been provisioned with the credentials for that access, working with our merchants on education and awareness to prevent account takeover, synthetic identity fraud, as you've mentioned, monitoring the transactions in real time and in aggregate, look back monitoring for trends and patterns, looking for out of bound, out of norm behaviors. And we do that with partners such as Plaid has mentioned, who provide additional data analytics related to that transaction, to certain characteristics about the payment that would indicate it's likely to be fraud or likely to be a valid payment before we initiate the movement of that funds. Establishing the direct connections to the card brands, card networks, has given us better access to data and better tools, as well as Manoj has mentioned, having those direct connections with Visa Send, Visa Direct, MasterCard Send, Amex OptBlue, to be able to monitor more factors about transactions as they're being initiated and then settled. And then working with, we're not in Canada yet, but in the U.S. with the ACH network and rules around bank account validation, bank account protection, knowing who that consumer is. As you mentioned, if you don't have a previous relationship with them, but they want to use their bank account to pay, making sure we've got protections in place before we go and debit somebody's account and take that money, that actually that entity owns that account and has authority to initiate payment out of that account. And then I would think the last piece, and probably a little more broadly, is continuing to be aware of and monitor and fight against the brute force card testing. So with the proliferation of the breaches and the availability of data now on the dark web being sold, working to identify attempts where someone wants to use our processing system through our merchants and through our partners to legitimize a card or to test a card to see if it's open and has an available balance before they sell it on the dark web to another individual for use. And so being aware of those attacks, being aware of those fraud schemes, working with our merchants to understand their specific fraud topologies and what they see in their business that we need to help them manage against, I think creates, again, that network effect from the consumer through the merchant onto recipient with the banks to help minimize the fraud at every step of the transaction lifecycle.
Great.
I'll add one thing. I think one of the takeaways for the audience, and certainly for a lot of the fintechs that are out there, you need to view this as a layered control approach to basically solving this. It's not one thing that's going to help you. I can tell you go ahead and use some of the network solutions, but that in of itself is not enough. We've seen merchants get scolded for $1.5 million within 24 hours by these fraud rings. They're really, really good. Every new challenger bank that we take live, we tell them you are going to get hit by fraudsters. It's not a bad question of if, it's a question of when. So it's an investment that every company needs to make. Take it seriously in terms of hiring risk professionals within your team that understand what it is. Understand what third-party tools that you're going to layer on in addition. So maybe it's Plaid services, or maybe there's other third-party tools that you can get from other providers that are going to look at IP matching, going to look at name, phone number, and all these other things as you do this. And look at the gaps in your risk assessment and your gaps in terms of how you handle things internally. So layering all these pieces together and constantly taking a look and seeing where there's gaps, that's what the fraudsters are doing. We see some of the largest neobanks, neobrokers, for example, in the US, where someone will be a legitimate customer for 5 months, and then that ring will start. They're probing, and then suddenly account takeovers will occur. They know where the weaknesses are, and then they'll strike. And then within 12 hours, 6 hours, $500,000 is gone. And then you try to get that money back and you can't. So these guys are really, really good, and you just need to be aware of the risks and the deficiencies that you have in your system, and continue to layer on speed bumps along the way that it's going to make it harder for these fraudsters.
Great, thanks. So Finix provides payments for a myriad of industries, including online commerce. And so it seems as though you've got two opposing goals. One is reducing fraud, and the other is increasing acceptance. So how do you all go about making sure that you're protecting your end customer and reducing fraud at the same time?
That's a great question. So it's obviously a very delicate balance, right? The false positives and the false negatives. And it takes a very proactive and comprehensive approach to do, as Corey's just said, to increase those authorization rates, get as many good transactions in through the system as possible, and keep out as many bad transactions, and do it in a nanosecond of time with automated decisioning. It's not always going to be able to be done through automation, so there's a certain percentage of transactions that will be tentatively approved, will have to be reviewed manually before they're cleared for settlement. And so, as I mentioned earlier, for us, it starts with the AML program and understanding the types of businesses we support, the types of payers that those merchants support, the types of payments they're expecting to come in, the expected payment amounts, partnering externally with providers who can validate, as Manoj mentioned, characteristics around that transaction beyond what the network provides back to us. We do transaction monitoring in two parts. We do a real-time monitoring, looking at characteristics of that transaction as it's entered into the system, into the network for payment. And then we do aggregate look-back monitoring, which does a myriad of comparisons of actual versus expected trends across a number of factors, looks for outliers. Both of those models are continuous learning models. It's not a set it and forget it approach. It's a build, learn, tweak, review, build, learn, tweak, review, and a cycle of continuous updating. We do use a lot of data analytics, both in real time and in aggregate, as I've mentioned, to analyze the authorization rates, to analyze the decline codes, to analyze the chargeback rates. Because of the spectrum of companies that we support, we can do that on a merchant level, across merchants for a software platform, across platforms for our platform, and in conjunction with our providers, contributing our data to their models, which makes the model stronger for everyone using those models for predictability of auth rates and decline and suspected fraud as well. The last piece, and one I can't stress enough, and it was mentioned earlier, is human oversight, human intervention. The humans are the weak link, whether it's credentials getting stolen, whether it's credentials getting compromised, whether it's someone forgetting to do a part of their operations role and reviewing a transaction, approving a settlement file incorrectly, holding up a file incorrectly. It requires ongoing, consistent training, both within Finix and across our merchant base. We do monthly internal webinars around fraud specifically, looking at internal metrics and what we're seeing, but also industry trends, what we're hearing from our partners, what we're finding from other webinars and conferences that we attend. It's a continual education and learning process for us, and then adapting the rules and adapting our business to meet those fraud schemes and topologies as they're identified, reacting as our partners and providers alert us to something of which we should be aware, and just staying vigilant that no matter what we're doing, we're probably right at or maybe one step behind what the fraudsters are doing, and always just trying to stay on top of, catch up, keep up, and get ahead of in rapid time and rapid pace.
Great, thanks. Anybody else?
I can comment as well. Sure. And I mean, the goal is always to grow the business, right? But yeah. I think what we're all saying at some point is that more data is better. So growing that business, having the transaction volume on the service, you're able to get more information and then do risk-based decisioning. We've talked also about consortium. So Interac sits in the middle when it comes to the money movement, the P2P, the P2B, the B2P. So we have a consortium view of everyone playing on this service. And this goes back to being together, sharing the intelligence. We can't do this alone. And we enabled, in some capacity, the FIs to be able to decision if the transaction is good to go on the network before it even leaves the bank account. So we provide a risk score, and they make that decision. We give them all the insights, and they're the ones who decision on the risk that they want to take. And then I think I can't stress enough that you can't do it alone. You need partners. And I think we're reaching a point that it's like, this is not sustainable. We have all these partners here that we can draw on, and it's mutually beneficial that we can help each other to fight fraud. Because as Manoj said, right, you got to layer it on. And you also can't think, okay, we did this. We're good for a few years. We can't sit on our laurels. And I've always said, I don't expect people to become fraud experts. But now I'm eating my words, because I think we all need to become fraud experts to a certain degree, because these criminals are constantly pivoting, they're adapting, and they will find the weakest link, and they'll take advantage of that.
Yeah, adoption is going to be driven by collaboration, and certainly Canada has just given the smaller number of banks that collaborate and what you guys are doing, you'll see that the effects are more effective, and as a result, the adoption is going to start to increase. We've seen a little bit of that slower in the U.S. Like historically, there hasn't been sharing of data across the FIs there, where you can try to prevent the actors. I mean, we maintain, or our database now is close to 100 million cards, and so we're able to see this across multiple banks, and you could start to see the fraud rings start to probe. But there are ways to be able to share that information. So kudos to some of the stuff that's done in Canada, because that collaboration is actually super effective, and we'll start to keep the tools in place to allow these merchants to be successful, to be able to move money.
Well, maybe a question for the group, and granted, some firms have been around a little longer than others, but have you seen a shift of the type of fraud across the platforms, whether that be organized crime or a handful of individuals trying to perpetuate a fraud?
I can start on this one. So certainly there's two parts to that. So what we've seen is the difference between authorized fraud and then unauthorized fraud. So let me just define those for a second here. Unauthorized fraud is when you get that email, hey, if you send $5,000 to that Nigerian prince and you're going to get whatever X amount of money back, is an example of authorized. Unauthorized is account takeover, right? I didn't authorize someone to take over my account and the like. So certainly with authorized fraud, we saw a tremendous increase in the U.S. In COVID with a lot of the relief funds where people had their accounts hacked. They would get their stimulus checks or their stimulus payouts taken away. Some of the new rulings now, the CFPB in the U.S. is now putting the onus back onto the FI or the merchant to be able to reimburse the consumer. So if I was genuinely thought, hey, I could send this money to turn my PG and my electric bill back on, the FI is now going to be responsible for that. Unauthorized fraud for account takeover is, you can buy credentials on dark web. And again, everything that we've been talking about, what tools can you do to prevent the user from accessing that card to be able to pull funds and then quickly disperse those funds out and then suck that money out on the back end. So is it verifying through network solutions? Is it verifying through third-party tools? Is it verifying based on that history of that user? All those things and real-time monitoring to be able to prevent that. That's the biggest growth that we've seen in authorized fraud across all our platforms, just because data is so readily available on accounts and it's easy to do this. And again, back to what I said before, the faster you allow money to move, when we do an account funding transaction, it's instant. Money is moved within seconds, money's there, money can now be moved out. So you can do that 24/7. These fraudsters know when things are quiet on a Friday night or Saturday early morning, and they're going to hit. And so if you don't have the controls in place, that's where you're going to start to see a spike.
I'd echo that. Yeah. Same thing. We saw the same during COVID. Authorized fraud was prevalent, and mostly because there was a need for something, right? And scarcity was there. So you wanted mask and N95 mask, and nobody had them. So then somebody on Kijiji would sell them. And of course, the goods would never get delivered. So there was a lot of that. At one point, it was firewood in Montreal. I remember getting a lot of calls about that. But then there's account takeovers. And so credentials are readily available. But also we're seeing a significant amount and never experienced before of phishing campaigns that we see, and we hire also a third party to take down those phishing campaigns, but they are left, right, and center. I think that ChatGPT, they have templates now for phishing. It's just so easy, and I'm sure that you probably get at least one phishing email or SMS a day. And think about, you just need one person to click on it and give the credential. So I think they know that it works. Criminals know that you're providing this information, and then now they've kind of figured out a way how to trick you to give away your MFA, so your multi-factor authentication. So that just opens the door wide open for them to get into your online banking and transfer funds.
Great. Well, sticking with you, Rachel, Interac does account-to-account transfers, and with real-time transfers becoming more prevalent. We've got a room full of consumers. So what are you doing to protect the consumer, and what's the recourse to a consumer if you do get hit with fraud in a real-time world?
Right, so we already have exposure to real time. We offer it to our commercial customers. So that's already readily available. You have to understand on the commercial side, if you're using your online banking commercial platform, it has additional layers of security more than on the retail account. So that already layers it up. And because it's real time, we already know who the funds are going to go to. So sitting in the middle, all the risk evaluation that is taking place takes place before the transaction is sent through the network. So nothing in that, I would say 3 seconds, unless, a fraudster is very creative, but I would say for the majority of the time, nothing will happen during that 3 seconds that the transaction is gone. But also, we've already done all the evaluation because you won't gain additional information during that time. So nothing changes. You're doing all the risk base at the beginning, and then you have the recipient. So in that case, fraud is very low. Would it happen in the same way for retail? I think that's where the risk gets elevated. The number one threat on real time right now is business email compromise. So it goes back to what we said, the weakest link, somebody, business email compromise or vendor email compromise gets through the front door, and that's where the funds, that's the typical fraud that we see. And then the recourse, that lies with the financial institutions.
Right. And Mark, maybe, with Plaid, how do you all think about it beyond just reputational risk, because you are the great connector?
Yeah. So maybe it might be helpful here to explain sort of how we actually participate in the payment ecosystem. Because traditionally we're known as sort of a pure data sharing network. Really two primary ways. The first one is with partner processors, where they will enable a bank-to-bank payment. Should have made that clear at the beginning, focused on bank-to-bank payments, similarly to Interac, as opposed to a card network. We'll provide them with account authorization, account ID information, balance information, all of this that we pass to a processor to process a payment. That data also used to manage the fraud. Signal I've already mentioned, all of that. We also, in the US specifically, we offer a full suite that includes the processing connection to FedNow, most recently to RTR and to the ACH network here. So depending on where we are exactly, we are focused on slightly different things. As I've mentioned before, we're focused on giving businesses the tools to manage fraud. And without sounding repetitive, it's that overlapping effect, right? So the example that Rachel just gave about, with first-party account takeover, it's difficult to catch, and we're seeing that increase too. Synthetic fraud too. People who know the details of the AML regime know where they can insert new information, know where they can pull, and the validation there is, the solution to that is actually not rocket science, but can have big impact. So on the payouts, for example, one way to do that is to validate the recipient bank account, right? Which will actually reduce quite drastically the amount of fraudulent payouts, because you quickly recognize whether or not the destination is who it's supposed to be. And on the synthetic fraud, it's just that constant overlapping of the personal information from various sources. And the more sources that you feed into it, the much more likely you are to catch the fraud. That applies both to our processing partners and to us. With us, from a processing perspective, it's about your risk threshold, right? You won't stop it. In my opinion, I agree that it is a core component of how you run your business. You should understand your fraud levels because it directly affects your P&L, it affects your profitability. Where you set that is what you're optimizing for. Is it growth? Is it, is it profitability? Is it killing all fraud? Which, is, you spend a lot of time there. because we are moving money bank to bank, that's why you see our focus are really focused on de-risking the before payment process as much as possible. Because once these payments hit the rails, they're generally irrevocable and permanent. So that's why you see us spending so much time in that pre-transaction phase.
And just, kind of sticking close to the consumers in the room.
Yeah.
This is for the group. How do you work with the authorities in terms of hearing about fraudsters in the marketplace? And is that real time? Are you reporting it? Are they reporting to you? Are they giving you a call? Is there like a speed dial, a red phone that you can pick up?
Bat phone? Yeah.
Doesn't work quite like that.
No. Well, I would say for in Canada, then the issuer is usually the one who will reimburse the customer on a unauthorized fraud. So then it becomes the responsibility of the issuer, because they're the victim, to report it to law enforcement. We also work with agencies such as RCMP, so we have the Canadian Anti-Fraud Centre that is a reporting center just for information, and they'll also provide guidance as to where to go to file a complaint. But I don't know what the rest of the panelists, the experience is like, but I mean, it's challenging for law enforcement because there's so much fraud out there, and it's like, do you only chase, do you chase less than $5,000? There's so many of them, so they are challenged for resources. And I would say, aside from authorized fraud, all the unauthorized is probably those criminals are not in Canada. Yeah. So how do you combat that, right? There's no deterrent that I would say. I don't know about my colleagues.
I agree with that.
They do call you once in a while when they have a specific question. But in the U.S. at least, and I'm not familiar with Canadian reporting, but in the U.S. there's reporting requirements, and it's driven by your risk program, by your reporting criteria. If you're registered directly with FinCEN, it's driven by some of their rules and regs. And if not, in our case, it's driven by what's passed down to us from our sponsor banks and our partner banks. But we do have to report at certain thresholds based on certain criteria to our sponsor bank, who then reports it to the authorities through a suspicious activity reporting filing. Those go into a database. And I think what's interesting, I don't necessarily, for the ones I filed historically, have rarely heard back on the filing itself, but I have heard from law enforcement when they're investigating something else. And so once those things are filed, I think law enforcement is putting pieces together behind the scenes, looking to see if there's enough filings that aggregate to suspicion of a large-scale fraud ring of some sort. And so it's kind of an unknown what happens once you file, but there is requirements to file given the criteria of your program. And then it just goes from there to hopefully improve the investigations that we may or may never hear the outcome from.
All right, with that, we're out of time, and I don't have enough time to ask my other questions that I had on this list, but I think we may have some time for questions from the audience. No? Uh-oh. Sorry, folks. Riveting conversation about fraud. Hopefully you learned a little bit. Oh, we do have time. No. I'm getting mixed signals.